Good evening, ladies and gentlemen, and thank you for your patience for waiting. We all know that we are a bit late, and we also know that you are very eager to see this year's competition. What is this competition? It's the CFA Institute Research Challenge Sri Lanka 2023. The CFA Institute Research Challenge is an annual global competition that provides students across universities with hands-on mentoring and intensive training in financial analysis and professional ethics. Now, the CFA Institute Research Challenge, hosted by CFA Society Sri Lanka, offers the participants of the competition the unique opportunity to learn from leading industry experts and compete with peers from world's top undergraduate programs. So to make all of this possible, there needs to be sponsors. So let me first give credit to our good standing sponsors. Our platinum sponsor for today's event is Colombo Stock Exchange. Silver sponsors are Equity Partners, Capital Alliance Group, First Capital, NDB Capital Holdings, Senfin Asset Management, USA Base, Sri Lanka. Our knowledge partners are Equity Knowledge Partners, and our event sponsors are Kaplan Swesher. Thank you all, the sponsors and the partners, for making this event a reality. Thank you very much to you all. Before we start up the lineup for today's competition, we have an introductory video that will give you a sneak peek and explanation to the competition and the journey so far.
What we do as financial professionals is for the ultimate benefit of our communities. And I think it's wonderful that we have teams here in this final today. This is an incredible competition. If you are in the last five, I mean, what an incredible achievement that is. The winner of the CFA Institute Research Challenge Global Final is Ateneo de Manila.
There you go, ladies and gentlemen, and all the participants, a sneak peek of what to come. And I hope one of the teams that are going to compete today will fly our flag high on the regional and sub-regional competitions, and even in the global stage. Let's keep our fingers crossed and knock on wood. So, ladies and gentlemen, before I give you a certain amount of information about the research challenge, as you know, this is the 12th edition of the CFA Research Challenge, which CFA Society Sri Lanka is hosting today. So to give you a warm welcome and to give you a proper introduction, may I invite my colleague who is part of this organizing committee, who's facilitating the CFA Institute Research Challenge Sri Lanka 2023, Enisha Pereira, to give the welcome address. Enisha, over to you.
Thanks a lot, Vijit. So welcome to the local leg of the CFA Institute Research Challenge 2023. A warm welcome to all the participants joining us today physically, and a warm welcome to everyone joining us virtually, including our panel of judges, Andrew, Nadika, and Udishan. Thank you very much for taking the time off today for joining us and to agreeing to judge the individuals today. There's a lot of people who have joined us. There are graders joining us. There are mentors who have joined us. There are universities who've joined us. There's also members of the CFA Society Sri Lanka who we know have joined us virtually. So welcome on board. We're very excited to see what's, what lies ahead in the next couple of minutes and the next couple of hours. So I'm going to keep the welcome address very short, because you will hear from me at the end of this session as well with the vote of thanks, where I will be speaking a lot more because I have a long list of individuals to thank as well. So keeping it very short. So welcome, and over to you, Vijit, to basically start off, because I know everyone's eagerly waiting to hear from the teams themselves.
Thank you, Enisha. Thanks a lot. And as Enisha mentioned, we have a few panelists, a panel of judges who are going to evaluate today's competition, and they are joining us virtually from different parts of the world, by the way. And so this is the time that we introduce them. So our first judge for this year's competition is Dr. Andrew Stotz, Chief Executive Officer of A. Stotz Investment Research and the co-founder of CoffeeWorks, which is Thailand's leading B2B specialty coffee roaster. I would really love to taste one of those coffees, Doctor. Dr. Andrews served 2 terms as president of the CFA Society Thailand, and during his investment banking career, he was voted the #1 financial analyst in Thailand. Dr. Andrew is also the host of my Worst Investment Ever podcast that helps future generations reduce their investment risk by learning through the stories of others. Definitely, I'm going to subscribe for that podcast. In addition to his 3 decades of experience in financial industry and teaching finance, Dr. Andrew has also written 4 books and 6 online courses as well. Ladies and gentlemen, joining us from Thailand, please put your hands together in welcoming Dr. Andrew Stotz, our first judge for the evening.
Thank you, everybody.
So moving on to our second judge of the evening, we have Mrs. Nadika Ranasinghe. Nadika is a director at Fitch Ratings Lanka Limited, heading Sri Lanka's corporate rating portfolio. Nadika has 17 years of experience in investment research and capital markets, and is a CFA charter holder, and also holds a LLB from Faculty of Law, University of Colombo. She is also a past finalist of Chartered Institute of Management Accountants, UK. Ladies and gentlemen, please join me in welcoming Ms. Nadika Ranasinghe, our second judge for the evening.
Thank you, and thanks for having me.
Moving on to our final judge of the evening, we have Mr. Udishan Jonas. Mr. Udishan is currently the Chief Strategist at the HAL Group, bringing him a wealth of experience and expertise in investment banking and research. Prior to his current role, he served as the head of research at CAL Securities and also worked as a fund manager at CAL Investments. Under his leadership, the CAL research team was recognized 3 times in a row as the best equity research team by the CFA Society Sri Lanka. Udishan holds a CFA charter and is an associate member of the Chartered Institute of Management Accountants, UK. He obtained his Bachelor of Business degree from Edith Cowan University in Australia and is also a visiting lecturer for the CFA program. Ladies and gentlemen, for one last time, please join me in welcoming Mr. Udishan Jonas, our final and third judge for the evening.
Thanks, Vijay.
Ladies and gentlemen, so on behalf of the CFA Society, in honoring and pleasure to welcome you all, and we look forward for an intellectually stimulating competition. So from the judges, now what we are to do is we need to recognize the teams who have been selected as the 4 finalists for today's competition. So once so this is not in order, I'm just randomly telling you that 4 teams that have been selected, and afterwards we will be choosing each individual team to come forward and make their pitch for the judges. So the 4 finalists who have gone through this year's competition and who have been selected from many universities that have participated in this year's competition are as follows. University of Colombo, Team 1, University of Colombo, Team 5, and University of Kelaniya, Team B, and finally, University of Sri Jayawardhanapura, Team A. So just to give you a snippet, these 4 finalists were selected out of 19 teams that took part in this year's competition. To give you further information about the competition, the target company that these undergraduates evaluated and put their thesis ahead was BPPL Holdings PLC. And we have a video of BPPL Holdings as well, and you can see that later on during the competition. So I think it's now time to invite the first team to go ahead and do the competition. If we can put that in. So the first team for today is from University of Colombo, Team 1. Yeah, so we have 6 team members joining University of Colombo, and I'll now give them some time to settle down, and during which time I will hand over the proceedings to my colleague Sulakshana, who is part of our organizing committee and who will also keep time during the course of this competition. Just to give you an understanding, the competition is broken down into 2 parts. So one is they will be pitching about their buy, sell, or hold recommendation to the judges. And then afterwards, there is another time allocated for the Q&A, and Sulakshana will be keeping time for both those sessions. So all the best, University of Colombo, Team 1. See you on the other side.
We can see the slides, team. You may start the presentation. Seems they are having a slight connection issue. Let's give a couple of minutes for the team to start.
So, ladies and gentlemen, until team A from team 1 from University of Colombo get settled down and sort out their connection issue, I'll try to give you an understanding about the whole process of this competition. So today, as I've told you earlier, we have 4 teams who will be presenting, and the subject company is BPPL Holdings. And these undergraduates have been going through the company financial statements, meeting the management, and the publicly available information. So they have produced a report, which they were evaluated, and then they were selected as the 4 finalists for today's presentation. Sulakshana, are we good to go? So until Sulakshana comes back to us, I'll just give you a bit more information. So once a team is selected from today's competition, they will be representing Sri Lanka in the sub-regional competition, and then they will move on. If they win the sub-regional competition, they will move on to the regional competition, and then finally the global competition. So Sri Lankan flag is at stake today. The team that is going to win today's competition will be holding the flag very high in the sub-regional competitions as we move along. And I feel we are good to go.
Team, can you start sharing your screen? We can see the screen. Maybe if you can go to a full screen mode, and from there you can start the presentation.
Start a reader because the host is stopped it. Host has stopped it.
Team, you can start the presentation. We can see the screen as well. Team 1, I think you're on mute and you can start the presentation now.
We are Team I from University of Colombo, here to present our investment coverage on BPPL Holdings PLC with a buy recommendation at a target price of rupees 25.72, implying a 14.3% upside. BPPL Holdings is a large brush manufacturer based in Sri Lanka and a leading plastics recycler in Southeast Asia. BPPL mainly operates in two segments, brushware and filament and yarn. It is active globally in many regions, including North America, Asia, Europe, Australia, and New Zealand. We issue a buy recommendation based on these 4 points. Capacity utilization levels of BPPL are expected to steadily increase on the back of growing demand and increased availability of PET bottles. Despite the brushware segment operating below optimal capacity, with market expansion and price increases, the upward trend in capacity levels is expected to continue. High demand for BPPL's synthetic yarns stemming from end customers' preference for sustainable raw materials and 129% planned capacity expansion by the company leads to greater capacity utilization. Devaluation of foreign exchange has become a major reason for the amplified revenue of BPPL. Nearly 67% of the revenue of BPPL is sourced from the export market. Now, the given graph depicts the Forex for the past 4 years, as well as estimates for the next 3 years, since Forex has a major impact on BPPL's revenue. When forecasting Forex, we have considered factors like tourist arrival and trade deficit. Tourist arrival has drastically decreased within the past few years in line with Easter Sunday attack, COVID-19, and the unstable economic situation in the country. In addition to that, the trade deficit of Sri Lanka has also increased in the past 3 years. So all these factors have caused future Forex to be stagnant.
Our next point of discussion is the unique positioning of yarn. Overall global yarn market is expected to grow by 4.4 CAGR. One factor which creates this rise in demand is the apparel sector. This is seen in the retail customer market, where more buyers are willing to pay a premium price in the products sourced sustainably. Yarn is a crucial raw material for garment and thread production. So yarn has a unique opportunity given that the yarn has been sourced sustainably. Nike, which is a corporate client of BPL Holdings, expects to reach 100% sustainable sourcing by 2025 as well. Even in Sri Lankan markets, industry leaders focus on sustainability, which is seen in their targets and practices. BPL Holdings already has an existing initiative for recycled plastic. Still, there is more potential to recover plastic, and therefore we expect the percentage of recycled plastic bottle sourcing to increase over time. There are also more markets to explore in BPL Holdings through yarn segments, and we expect the gross profit margin to increase with these trends. My next point. Eco-friendly concepts influence the supply chain and BPL Holdings. Many companies take measures to endorse in sustainability. However, BPL Holdings goes above and beyond it to integrate environmental and sustainable social governance aspects into their existing supply chain. We identified 3 different initiatives for plastic recycling that is used in this supply chain production. To optimize the supply chain, significant investments were made in all three factories, including the biomass power plant and solar panels. These investments materialized as the company was able to produce 44% of the total electricity consumption through these solar panels and drastically reduce energy and utility expenses through plastic recycling.
Another factor that supports our buy recommendation is the golden goose of BBPL Holdings, which is the brushware segment. In 2021, the brushware segment bounced back with a growth in the revenue, and we also expect the revenue from the brushware segment to grow in the future, mainly due to the rupee depreciation. While looking at the EBIT for the past few years, it can be identified that the brushware segment's EBIT is maintained at a stable level. This indicates that even though market expansion and price increases prevail, the segment remains extremely competitive due to the high number of players. In 2021 and 2022, many governments worldwide announced the cleaning sector as an essential service. This process helped to minimize the adverse effect of the pandemic on the company's performance. Since this specific announcement increased the demand for the brushware, the revenue generated from the brushware segment wasn't negatively impacted. When we look at the global cleaning products market, according to research findings, the market has been valued at $11,700 million in 2017. It is projected to reach $16,600 million by the end of 2025, growing at a CAGR of 4.5% from 2018 to 2025. Moving on to the financials, over the past few years, a significant amount of revenue has been generated from USA and Canada and Sri Lanka. From 2019 to 2022, an overall increase in the revenue can be observed. Compared to the revenue growth of 31% in 2021, there was a revenue growth of 41% in 2022. While there was an increase of 13% in the brushes and related sales, there was an increase of 44% in the brush filament sales to the external customers and an increase of 110% in the recycled polyester yarn sales. According to the forecast made, a growth in the revenue is expected in the upcoming years. When we look at the profits, the high revenue growth significantly improved the profitability, and gross profits increased by 38% and 19% year-over-year in 2021 and 2022 respectively. High revenue growth is expected to drive the increase in the gross profits. We expect the gross profits to increase in the future, which would also ultimately lead to growth in the EBIT margin. From 2020, there was an upward trend in the company's return on equity, while there was an increase from 14% to 21%. When looking at the dividends, in 2022, the dividend payout ratio increased to 20%, and the total amount of dividend paid increased from 73 million rupees in 2021 to 128 million rupees in 2022. From 2020 to 2022, an increase in the price-earnings ratio was also observed.
Focusing on our key catalyst for BPPL Holding, we used to blend a discounted cash flow valuation and using a 12-month target share price of LKR 25.72, which has an investment upside of 14.3%. In terms of DCF price, we computed using weighted average cost of capital of 14.5% as the relevant discount rate for unlevered free cash flow at a target debt to equity of 51%. The cost of the equity of 24% was computed using capital asset pricing model, assuming our beta at 1.1 as a consequence of BPPL share price movement volatility is slightly higher than ASPI model. After-tax cost of debt stood at 6%, while incorporating tax rates of 30%, which is the current corporate tax. Cost of the debt has been derived considering companies' finance as a portions of their debt, as well as the current commercial bank loan rate adjusted. The terminal growth rate for the company stood at modest 1.3%, which has been arrived through considering GDP growth and inflation in the past years and forthcoming years. Based on our dividend discount model, the instructed target price is computed at LKR 24.41, the stage 1 growth rate at 27.5%, while stage 2 growth rate is at 22%, by being conservative. For the past 4 years, BPPL has recorded around 30% of dividend payout 2% bullish market. However, we expect a downside of 12%.
However, with the recovery coming
by considering and the factors that would drive revenue for
to go up in the future in line with companies' profit and
able to provide recommendations specifically.
Ultimately, both discounted cash flow model and dividend discount model have verified a buy recommendation for people.
This will bend but never breaks. We have conducted a comprehensive analysis in terms of risk to assess and understand the factors that would sway our recommendations. We looked at our key operational, financial, and market risks. Disruption in production activities, which can be due to electricity or due to disruption in raw material coming in time, that can be not likely to happen in future, but however, we recommend them to have a strong backward integration in the supply chain network, along with an action plan to mitigate this risk. Depreciation of local currency might threaten BPPL's import margins. However, significant exports and forward contracts on raw materials can mitigate this risk. Increase in freight rates can also threaten this particular company, where we suggest BPPL to get long-term contracts with the logistics arm or to develop their own logistics arm as well. Expanding into new markets, specifically in South Asian market or Indonesian market, would also reduce the dependence on US and Canadian market as well. With the strong growth in yarn and brushwear segment with positive margins and sustainable supply chain network, we reiterate our buy recommendation for BPPL Holdings at a target share price of 25.72 at an upside potential of 14.3%. Are you ready to pitch in for a green fortune? And we are Team I from University of Colombo, and we are open for your questions. Thank you.
Excellent. I think I'll start the question. I was looking at your forecast. Maybe we can look at the revenue growth forecast where you had that chart and you also have your foreign exchange assumptions. And on that chart, it looks like very strong revenue growth, and with a foreign exchange expectation of flat now. If that's the case, it seems like your growth is really high and your margin is really high. But when I looked at your DCF value, the discrete period value is quite low compared to the terminal value. Maybe you can just explain a little bit about that.
Yes, we have forecasted high margins for BPPL in the coming years because we expect the capacity utilization to increase in the future in line with the yarn expansion program for the filament and yarn segment, in which although the current capacity is only 700 metric tons, it's expected to increase to even 1,600 metric tons in 2024. And also the LKR devaluation also has a major impact on BPPL's revenue. So in the future, it will be further stagnant, but also impacting BPPL's revenue and margins. And also with increased demand and BPPL's ability to secure orders 5 to 6 months in advance, we forecast that their margins will be healthier in the future.
But that's why I was a little bit curious. Can you go to your terminal value, your valuation slide? Because I think you do have pretty optimistic forecast, but you've also given some good reason for that. If we go to the next slide, maybe you can just explain that table at the bottom where it says present value of stage 2 terminal value. What is stage 1 and what is stage 2, just so I understand the periods of time?
Actually, stage one and both in stage 1 we have taken 27.5% in line with the revenue enhancement, because in the last year, on except for 2021, the dividend per share has gone down with the current the prevailing situation with the COVID-19 and economic stability, but then again it's gone up. So with the coming years, we expect their revenue going up, and then the capacity utilizations and the entire story that we have built up in this
for this BPPL company. So we expect their growth rate have gone up by 27.5% as to the coming future 5 years. And after that, as stage 2 rate, we expect it to be go down by little to 22% in the next further.
So what's the time period for stage 1? Is that like the next 3 years or something like that, or what? Just so I understand what you mean by
stage 1 is for the next 5 years, and stage 2 is for the after that, after the 5 years.
Okay. And when you say present value of stage 2 terminal value, you mean you're doing like a constant growth model at that period?
Yes.
Okay.
Yes.
And I'm just saying that value is pretty high, right? Most of the value is coming from that terminal. But usually you see that situation when the profitability of a company is kind of weak in the current period. But you're forecasting pretty strong periods. So I guess my question I'm asking is, do you think that you're too optimistic for the terminal period, or are you comfortable with those assumptions? That will be my last question.
Yeah, so we expect it to grow in the future. Reason why this company is very sustainable company. So the current action they have taken by using solar panel and the ESG initiatives, we think that will assist them to go up in the future even after the terminal period as well. So that's why we focus with the revenue capacity utilization plus the LKR devaluation. It's go up in the current 5 years, as also their sustainability initiative will obviously help them to go after that at 22% as their terminal stage 2 growth rate.
I have a question on the margin improvement, and you mentioned that the EBIT margin improvement is mainly coming from the capacity utilization. How easy is it going to be to kind of improve capacity utilization in a particular period where globally we are seeing a recession or recessionary conditions right now?
So we mainly consider the capacity utilization levels of BPPL are expected to steadily increase due to the growing demand. And in 2021 and 2022, the government worldwide has announced the cleaning sector as an essential service. Due to that, the demand for the cleaning products has increased. And despite the brushware segment operating below the optimal capacity right now, with the market expansion and the price increases, the upward trend in the capacity levels is expected to continue in the future. Apart from the capacity utilization, the devaluation of the foreign exchange has also become a major reason for the amplified revenue of BPPL and the future revenue growth for BPPL as well, since nearly 67% of the revenue of BPPL is sourced from the export market. And another factor which creates this rising demand is the apparel sector. This is seen in the retail consumer market, where more buyers are willing to pay a premium price in the product sourced sustainably. And yarn is a very important material for the garment and thread production. So yarn has a unique opportunity, given that the yarn has been resourced in a very sustainable manner. And there are also more markets for BPPL to explore through the yarn segment. So that's we expect the gross profit margin to increase with these trends. Thereby, there will be an ultimate increase in the EBIT as well.
To add to that, BPPL expects their capacity utilization to increase to 89% in 2024, in line with their yarn expansion initiative with the Yarn Expansion Part 2 program. And also, they're expecting to expand to South Asian and Indonesian markets, where they have better sourcing and better connections in their supply chain as well.
So the margin improvement is coming from the yarn segment, or is it coming from your traditional brushware product segment?
Since the brushware segment is at a maturity stage right now, their margins are expected to improve vastly from the yarn segment. So they're more towards the yarn segment in terms of their margins.
Okay, thank you.
Just a couple of questions from me. Again, linked to what Udishan was saying. So in terms of the yarn segment, even if you look at the quarterly results, the growth has not been that strong, and the margin improvement has not been as robust. So when do you see this strong capacity expansion to come through and convert to orders and give that result? Because if you do you have a chart which shows that kind of yarn segment revenue growth that you can show us?
Yes, I'll take this question. So yarn segment, Yeah, one main reason why yuan segment is trying to improve is basically BPPL had an US dollar loan that they have got in order to go for their yarn and filament expansion. So they are trying to say that through this expansion, through capitalizing this there's a capex project that is planning to come on where they're trying to expand more than 40% of their normal capacity utilization. So here, this particular chart shows what kind of a capacity utilization in terms of tons, metric tons, where they're trying to improve. So in 2022, it was around 3,000, but here we can see that they're trying to like double it more in even in 2025. So this particular thing was observed from the management team meeting that we had with them as well. And apart from that, one other sourcing was that yarn is the pet collection, the bottle collection that they have, the local sourcing in order to produce yarn is something which is unique that we see in BPPL holdings as well, because in Sri Lanka, there is more than around 75% of the coastal areas where they're trying to, capture these PET bottles in order to reduce the import cost and to try to source more from locally. So that is another thing. And obviously, another thing is they are trying to, make use of this loan to, create more of pet collection centers as well. So we see there is a more opportunities that they can capitalize in terms of increasing their yarn capacity as well, so that they can bring in more margins to them.
Adding to that, adding to that, what I would like to say is that, as my teammate said, that at the moment we haven't seen the total materialization of BPL Holdings in terms of their sustainability. So, for an example, BPL Holdings is the only Sri Lankan company on Forbes Asia for under 200 million. Sorry. $1 million US. They're the only company in Forbes Asia has been renowned. So that kind of recognition is only received by BPL Holdings for its sustainability practices. So right now we do see a few investments made. However, there's still so much potential in BPL Holdings. So we do believe that over time there's a lot of more benefits to be materialized as a result. We do, like my previous questions also, we do expect an increase to occur over time as well, especially in the yarn segment.
To add to that, they have also invested in a yarn expansion program, and they capitalized the cost of the phase 2 for the recycled yarn expansion program back in March 2022, following the commissioning of the plant.
Okay.
Thanks, UOC Team 1. I think the time allocated for the Q&A session is up. Over to you, Vijit.
Thank you, Sulakshana, and thank you, University of Colombo Team 1. Ladies and gentlemen, that was our first team in the CFA Institute Research Challenge Sri Lanka Competition 2023. University of Colombo Team 1 was represented by Sadisha, Bulani, Tharani, Kavindya, and the team was led by Gajani. So now we move on to team number 2, which is University of Kelaniya Team B. So University of Kelaniya Team B is represented by 5 team members and the faculty mentor, as you can see. We'll give them some time to settle in and start their presentation. So all the best for University of Kelaniya Team B. See you on the other side, and may I hand over the proceedings to my good colleague Sulakshana to take it over from here.
Thanks, Vijit. Team, you may share the screen. University of California, Team B, are you on the call?
Ladies and gentlemen, it looks like we are having a slight technical difficulty until such time Team B from University of California settles in. Let me introduce the team to you. So today the team is represented by Dinushi, Tharidu, and Lochan. There is also Prabodha, and the team is led by Hansini. This is our second team who's going to present. So they are also going to present on the same company, which is BPPL Holdings PLC. And they will be now presenting their recommendation to the panel of judges. And then, as with University of Colombo Team 1, post the presentation, the judges will be asking questions specific to their presentation. So they will be evaluated based on their performance. And Sulakshana, I assume that Team California, Team B from University of California is now settled in. So over to you, Sulakshana, and University of California Team B, all the best.
Thanks, Vijit. Team, can you start sharing the screen? We can see the screen. You may go on full screen mode and start the presentation. Just, I hope all of your teammates have joined the meeting.
Good evening, ladies and gentlemen. Let's move PET recycling to beat the jackpot. Team B from University of California issue a buy recommendation for BPPL with a 12-month target price of 30 rupees and 70 cents, reflecting an upside potential of 36% and a total return of 38%. We issue this buy recommendation for BPPL on the back of three main valid catalysts. 1. Amplified revenue through capacity expansion. 2. Brushware segment revenue to rise as a stable cash cow. 3. BPPL supply chain targets going in line with the national sustainability targets. BPPL is renowned as one of Asia's largest brush manufacturers and the only recycled polyester yarn producer in Sri Lanka. BPPL currently operates with two fully owned subsidiaries. Vera Brush Private Limited manufacture brushware from recycled PET filament. Eco Spriggles manufacture synthetic yarn. BPPL reported a revenue of 4.8 billion in financial year 2022, with majority of revenue contribution from the brushware segment. USA and Canada accounted for nearly 50% of the revenue in financial year 2022. BPPL profitability margin stood 1.6 times above its international peers, providing substantial value not just for the shareholders but for the planet at large.
Our buy recommendation is backed with 3 investment catalysts, making our way to the first value catalyst. BPPL currently owns only recycled synthetic yarn manufacturing plant in Sri Lanka, with a 27% planned capacity expansion expected to be realized by financial year 27. Through this capacity expansion program, company expected to increase their yarn segment revenue at 48% CAGR in financial year 27. Owing to the global consumer shift towards sustainable fashion, the major fashion brands have stated target to reach 100% sustainability in sourcing their raw materials. Moving to our second value catalyst. BPPL's brushwear segment will be a cash cow with no immediate requirement of capex. Due to the ongoing world economic crisis, the segment is currently operating below its optimum capacity. While the market expansion and resistance slowdown, we believe the segmental volume increased at 5% CAGR with 3% of capex growth. The organic growth in the short term will be supported by the heightened fight for hygiene in the post-COVID era. Therefore, the average US household cleaning products expenditure increased at 5% CAGR in financial year 27. Moving to our third value catalyst. BPPL is currently sourcing 65% of their overall pet requirement locally. Rest is imported. When the raw material imports, company must bear an additional 20% cost per 1 kilogram of pet plates. To avoid this additional cost, company stated the target to sourcing 90% of their overall pet requirement locally in financial year 27. Under the extended producer responsibility concept, plastic waste contributors are moving to recycling their plastic wastage. Join with BPPL. We believe it will cover 80% of companies' overall pet requirement locally in financial year 27. And also the National Action Plan of Plastic Waste Management, Sri Lankan government expected to increase plastic recycling to 100% in financial year 27.
Financials of BPPL further reiterate our buy recommendation. We expect solid local and export sales growth with 15% to 27% over the forecasted period due to positive revenue growth from the both segment. The brushwear segment is expected to provide steady earnings, benefiting from healthcare depreciation and growing demand for industrial brushes in automotive and industrial manufacturing applications in North American markets. When it comes to the filament and yarn segment, it's expected to grow at a 5-year CAGR of 48% once the full capacity is observed. Feeling that capacity will not be a challenge for BPL due to the upward trajectory in demand for synthetic yarn locally and globally. Further, BPL is able to charge premium prices for its recycled yarn owing to the global consumer shift towards sustainable apparel. Moving on to the profitability margins of BPL. It aims to increase its local raw material sourcing rate of 65% to 90% through the expansion of collection centers. With that, raw material cost is expected to go down, increase yarn plant productivity, and reduce raw material costs would further support the growth in profit margin. The rise in ROE of the period is mainly driven by financial leverage as a result of loans obtained for capacity expansion. Looking at the solvency of BPPL, the debt-to-equity ratio is anticipated to increase due to yarn plant expansion and installation of solar panels. We forecast a debt-to-equity ratio of 114% in financial year 23, and we target a debt-to-equity ratio of 63% in the long run, which is the average debt-to-equity ratio of its near industry peers. Over the past few years, BPL has paid a DPS of 42 cents each year, and we anticipate it will maintain a dividend payout ratio of 20% over the forecasted period, with EPS forecasted to grow to 7 rupees and 73 cents. Our valuation reflects our key catalyst for BPPL. Our buy recommendation is warranted by a blended DCF valuation, arriving at a target price of 30 rupees and 70 cents, reflecting an upside potential of 36% and a total return of 38%. Our free cash flow based valuation accounts for BPPL's impressive and stable future growth, arriving at a price upside of 36%. Due to the prevailing economic vulnerabilities and ongoing Sri Lankan economic crisis, it was advisable to forecast the company back. In arriving at the back composition, we accounted for a target debt-to-equity ratio of 63% based on the average debt-to-equity ratio of the industry peers of BPPL. After-tax cost of debt was forecasted based on the weighted AWPLR and LIBOR. We weigh the equity risk premium was computed based on the capital asset pricing model. We weigh the equity risk premium based on the revenue-weighted equity risk premium presented by Damodaran. Risk-free rate was forecasted based on the 10-year bond yield and a relevered beta of 0.42 based on the beta of the industry peers of BPPL. Our terminal growth rate for BPPL stood at conservative 1% to reflect the ongoing Sri Lankan economic crisis and the forthcoming economic recession in majority of its key markets. An increase in the terminal growth rate will further appreciate the share price beyond our target price as seen in the sensitivity analysis. We also tested our three metrics to a Monte Carlo simulation where 82% of the scenarios supported our recommendation, with only 5% leading to a change in our recommendation. The relative valuation was primarily based on the PE multiple implied share price based on BPPL's growth, profitability, and risk factors compared to the peer group in the Asia Pacific region. A 37% price upside further verifies our buy recommendation.
When moving on to ESG, based on definitive ESG scorecard analysis, we estimated the company ESG score as 93% with excellence measured in ESG practices. When moving on to environmental pillar, BPL focuses on resource efficiency, carbon emission, and innovation. BPL ensures efficient use of resources through recycling 57 tons of PET bottles and 50 tons of plastic per month. Establishing 450 drop-off bins around the country. Further, use of alternative energy sources such as solar and biomass. The green gas carbon emission was reduced by 82%. The water usage was reduced by 50%. Due to its innovation, it has eco-friendly production process and uses dope dyeing method for high-quality production. Moving on to social pillar. BPPL ensures equal opportunities to its workforce and has strong ethical practices to ensure human rights. It has 25% of female representation in its workforce. BPL also promotes self-employment and job opportunities to over 2,500 low-income earners. Under the governance pillar, BPL focuses on management, shareholder, CSR projects. BPL has good governance system with well-diversified board with 3 out of 5 members being independent and non-executive directors. Shareholder rights are well protected by the company. BPPL also conducted CSR projects including coastal and pilgrimage waste management program throughout the past years, which collect 20 tons of plastic per month. Overall, BPL has excellence in ESG practices.
BPPL's robust strategic plan can minimize investment risks. We identify several operational, financial, market, and political risks related to the company. From the investor's point of view, increasing in high leverage can make some potential impact to their earnings. Due to the ongoing capacity expansion program, company recently obtained different loans from several parties. So we believe the current high gearing ratio will decline to 63% in financial year 27 after capacity expansion is fully utilized. Among the political risks, removal of GSP Plus can make some potential impact to company's yarn segment revenue because the yarn segment is exposed to apparel industry. After the removal of GSP Plus, apparel industry may shift out of the country. But if the BPL suppliers are still willing to stay with them, we believe the segment will be a dollar earner.
With strong growth prospects, positive margins, and a sustainable business model, we reiterate our buy recommendation for BPPL with a 12-month target price of 30 rupees and 70 cents, reflecting an upside potential of 36%. So are you ready to pitch in for sustainability? We have been Team B from University of California, and we are now open to your questions. Thank you.
Excellent. Maybe I'll ask the first question is, if I look at your terminal growth rate, it's pretty low at 1%. And your upside is very, pretty good, pretty high. And your discount rate is reasonable. It's not too low. So it's not inflating the value, I would say. So it makes me concerned that your profitability and growth estimates for the future could be a bit high relative to what the market expects. And that could be why you're coming up with such a high upside. Maybe you can explain the role of profitability and growth in driving your upside.
Yes, thank you for your question. I may take this question. Yes, so we have used a very conservative terminal growth rate, which is 1%, which reflects the ongoing Sri Lankan economic crisis and the forthcoming recession in the majority of key markets of BPPL. So, as you asked, so we are going for a 36% price upside, so which will be backed by the 3 investment catalysts that we stressed out throughout our presentation. So, what we expect is the yarn segment revenue to amplify through the capacity expansion that we forecast in the coming years. So the yarn segment revenue will be amplified through a volume growth of 26% and a very conservative like 1% price growth, and mainly driven by the brushwear segment revenue will be mainly driven by the depreciation, which is around 16%. 16% depreciation, that when we account for the financial year 2022 and 2023, where we experienced a hike in the depreciation, rupee depreciation. So if you talk about
maybe I can just follow up a little bit too. The other question is, with a 30% upside, you're basically seeing something that the market's not seeing, right? You're more optimistic. Maybe you could explain that difference from the market in this specific, profitability level.
Sure.
Because what you explained, maybe the market understands that already, or what is your perception of where you guys are different from the market? That will be my last question.
Sure. Yes. So what market does not see is that we have we have conducted an in-depth research on the company, and we have already studied the industry and the company thoroughly, and that is the first thing. And then what market does not see is we have participated for a management discussion where we have all got the information from the management about their growth prospects and what their plans for the future are. And then there is a particular asymmetry of information in the market and in us. We know more information about the company, their growth prospects, and where they are heading to. So that is one thing. And if you take the current stock market in Sri Lanka, the CFA, it is mainly given by the retail investors and more than the institutional investors who are really looking into short-term returns. But we have conducted a fundamental analysis forecasting our revenue for a long-term, looking at the long-term prospects of the company. So we do not expect the company to achieve these growth in the near term, but we expect them to achieve these in the long term. Their revenue to amplify in the long term, which will be realized in the long term. So market will get to know about these growth and revenue growth in the long term once the company materialize on the catalyst that we emphasize. So that is why there is a difference. That is why the market has not yet adjusted this to the market price.
I have one question on the forecast that you have on the revenue for the brushware segment. So you showed a graph, I think, which had a 5% industry growth in terms of brushware consumption demand increasing over time. But your revenue growth was somewhere on 18% on the brushware segment. Could you explain why your revenue is growing way higher than the industry and what the rationale behind it is?
Yes. Thank you for your question. Let me take this question as well. So yes, so brushware segment is the cash cow of BPPL. So that is our second serious point. We stressed out that brushware is the cash cow. It provides steady earnings and contributes to the majority of revenue of BPPL, which is around 71%. So we do not expect the volumes are expected to grow at a 5% CAGR, and the revenues are expected to grow by 18%, mainly due to the brushware segment revenue is mainly driven by the LKR depreciation. So we experienced a peak in the depreciation in financial year 2022 and 2022 to up till now. So therefore we expect around a 16% depreciation, 16% growth in depreciation. But going forward, we expect around 6% depreciation for both the segments, brushware as well as for the next for the other segment, because being very conservative, if you look at the depreciation rate prior to the economic crisis, it was around 4 to 6%. Being on the upper bound, we expect the depreciation to be 6% going forward for the next few years. So being on the upper bound, because we know that there's so much of uncertainty and risk being built up on the rupee, and we know that there's some debt restructuring happening in the country, but there is still a risk on the rupee because our current account, we don't have a current account surplus, it is a deficit. But even if we go for an IMF deal, and even if the exchange flows into the country, we don't expect that the IMF will allow the country to improve its reserves, rather to stabilize the rupee. So we don't expect the rupee to go for a very lower depreciation, but being conservative, we expect around 6%. So this is the main driver of the brushware revenue, because the brushware is exposed to the North American market. Around 95% of the revenue comes from North American market. So therefore, this is the main driver. The depreciation is the main driver of the brushware revenue. That is why we expect a 18% CAGR in the brushware revenue growth.
So to reiterate, so the CAGR that you're looking at is from March 2022 to 27. And if so, what is the CAGR in terms of revenue from the coming March 2023 to 27 or 28? In that case, are we looking at a revenue projection of only about 5% also on the brushware segment, if you're looking at from the year which is going to end in March 2023?
Yeah, so we expect around 5% CAGR to, in the short term. So in the long term, we expect around like the 5-year CAGR of 18% is for the brushware segment.
Okay, thank you.
Just a quick question from me. You also agreed that the interest rate is a risk for the company, and also mentioned that the debt levels have been going up. Can I know how you have kind of baked this into your investment thesis?
Yes, thank you for the question. I may take this question. So you mean, could you please repeat the question?
So the interest rate is a key risk, which you have also highlighted. Plus, companies' debt levels have gone up. So how you have kind of taken this into consideration when arriving at your forecast and your valuations?
Yeah, thank you. So how we modeled it to our valuation and how we took it to our investment thesis is, yes, the company is in its growth stage. The yarn plant is growing, and for the capacity building, they have obtained loans. $15 million loan will be obtained in 3 tranches in the coming year. So how we incorporated this to our thesis is that we, when we are forecasting the after-tax cost of debt for the back calculation, we weighted the after-tax cost of debt based on the US dollar loans, the percentage of US dollar loans obtained, and the rupee loans that the company has obtained. A significant amount of dollar loans have been obtained, and that's around 58%. So we weighted the AWPLR. We took the AWPLR and LIBOR in LIBOR rates in arriving at the after-tax cost of debt. So how we expect the financial risk of interest rate risk to how the companies expect to mitigate it is, we know that the LIBOR rates will be transformed to SOFR in June 2023, where SOFR is a very is cheaper than LIBOR compared to LIBOR. So that is one way how they can handle it. And also we know that going forward, the company will not rely highly on debt because it's generating enough revenue that we forecast, and they will be relying on organically generated revenue without going for more debt. So that is how they can mitigate the financial risk in the coming years.
Okay, thank you.
Thank you, team. I believe the time is up for the Q&A session. Over to you, Vijit.
Thank you, Sakshana, and thanks goes out to University of California Team B. That was quite an intense Q&A session, if I may say. Before we move on to our next team, which is Team 5 from University of Sri Jayawardhanapura, let me again give due credit to our sponsors who made this event a reality today. So let's look at our sponsors. As you know, Colombo Stock Exchange is our platinum sponsor for the day, and the silver sponsors are Equity Partners, Capital Alliance Group, First Capital, NDB Capital Holdings, Sinfin Asset Management, USA Base, Sri Lanka, and then the knowledge partner is Equity Knowledge Partners, and the event sponsor is Kaplan Swesher. As I've told you, so I assume that University of Sri Jayawardhanapura Team 5 is now getting ready to present their case for today's evening. And the University of Sri Jayawardhanapura Team 5 is represented by 5 team members, and I think we will have some time to go through their names as well. So if I start off, we have Yeshan, right? And we have Maliti, and we have Mahi and Hansani, and the team is led by Oshana. So let me hand over again to my good colleague Sulakshana to take over the proceedings and keep time. Over to you, Sulakshana, and all the best, University of Sri Jawadhanapura, team number A.
Thanks, Vijit. I believe all participants from the team has joined the call. Can you please start sharing your screen?
Hi, can I share my screen now?
Yes, Ushan.
Thank you.
We can see the screen. You may start presenting. All the very best.
Good afternoon, ladies and gentlemen. We present you a hidden gem for the long haul as we issue a buy recommendation for BPPL with a 24-month target price of LKR 31.9 based on the blended DCF and the relative valuation with an annualized upside potential of 18%. We believe the market has underappreciated the following 3 value catalysts: consumer shift towards socially responsible consumption, 2, irreplicable PT source in supply chain, as well as buffer against the local economic downturn. The major contribution to BPPL's 4.8 billion of revenue comes from the brushwear segment at the moment. However, we predict the recycled polyester yarn and monofilament segment to surpass the brushwear segment by financial year 26, owing to the changes in consumer dynamics coupled with high investments in the segment. Being the only RPY producer in Sri Lanka, this segment will drive the entire BPPL group into future prosperity while also taking care of Sri Lanka's pet wastage problem. With diversified markets stemming from both direct and indirect demand, BPPL is well cushioned to withstand any turbulence which comes its way. A 90% untapped local RPY market potential with the lowest lead time in the industry generates high growth potential for the RPY segment. An inelastic 5-year CAGR for professional brushes at 6% provides stability to the group, while BPPL outshines the competition through innovation, sustainability, and relationships.
In an era where environmental conservation is declared a social priority, many consumers have started to shift to socially responsible products. At the same time, polyester has been preferred globally over traditional yarn owing to the enhanced qualities it provides. This makes RPY the most lucrative offering for modern consumer requirements, which is also the core of BPPL. The RPY market is expected to grow by a 3-year CAGR of 6% due to the expected growth of polyester within the global fiber market by a 3-year CAGR of 4% and the growth of RPY as a percentage of polyester to 16% by 2025. The Sri Lankan apparel exports are expected to grow by 2 to 3% CAGR until 2027, on par with global textile growth, which is also an added advantage for BPPL. This is due to them generating 95% of the RPY revenue locally through indirect demand. BBPL also has taken initiatives to expand to countries such as India in the near future. Lower lead times, low inventory holding costs, along with the ease of traceability makes BBPL the best sourcing partner of RPY for local fabric and textile giants. The largely untapped market, along with continual capital expansions to capture the demand, acts as a key value driver for BBPL.
BBPL has a vertically integrated supply chain for recycled polyester yarn and monofilaments, allowing them to follow a direct conversion process which provides them comprehensive control over the entire manufacturing procedure from the initial point itself. They possess the best ecosystem in the country for sourcing raw materials to the vertically integrated supply chain, thus making it difficult for any new players to duplicate the process. From a monetary perspective, sourcing PET locally is expected to be over 50% more cost-effective in comparison to importing PET flakes. During the time frame covering the recent 2 to 3 years, the Sri Lankan economy entered a recessionary phase. Among these adversities, an improvement in BPPL in terms of revenue, profitability, and asset base was portrayed, hinting at a buffer against Sri Lankan economic downturns. The reasons were their revenue from the brushwear segment being reliant on diverse foreign markets, while an increasing international focus could be seen pertaining to RPY, when only 30% of the cost of sales were denominated in USD, thus providing a minimal dependency on a singular economy and lowering the risk to the entire group as a whole. The inelastic nature of the professional brushes are expected to provide a stable and progressive CAGR of around 6%.
Moving on to the financials, we forecast BPPL revenue at a 7-year CAGR of 15% in the forecasted period, the proportion of RPY contribution continuously increasing. The brushwear segment of BPPL is expected to enjoy a revenue growth of 10% over the next 7 years, where the USD revenue growth is on par with the long-term average GDP growth of the export destinations. Despite cost inflation, the continuous LKR depreciation would result in stable yet growing margins for the segment. In the RPY segment, aggressive capex additions have been undertaken to capture the 90% of the potential local market share, which is currently being imported. The COVID-related supply crunch has been resolved, which will allow BPPL to fully source PET locally, and the yarn plants to operate at 90% capacity utilization from the financial year 26, increasing the RPI margins back to a strong 25%. The LKR depreciation-induced gearing level is expected to come down, while the interest coverage ratio improves, reducing the overall risk. The earnings are expected to increase at a CAGR of 15% due to the stable margins and rapidly increasing top line.
We issue a buy recommendation for BPPL by using a blend of DCF valuation and a relative valuation backed by our key catalyst, which yields a 2-year target price of rupees 31.9, reflecting an 18% annualized upside. In arriving at our DCF price, we computed a weighted average cost of 27% as the relevant discount rate at a target debt-to-equity ratio of 40%. The cost of equity of 33.3% was computed using the capital asset pricing model and estimated the after-tax cost of debt is 17%. A conservative 1.8% is used as the terminal growth rate. We conducted a scenario analysis on 3 cases of growth in RPY and the margins of the group that yielded share prices of rupees 37.4, 32.9, and 27.3 respectively. The sensitivity analysis was conducted on the variables of WACC, terminal growth, and effective tax rate, where the recommendation was more sensitive to WACC. To supplement the DCF, we conducted a relative valuation using 2 different peer groups to reflect the 2 segments due to the lack of directly comparable listed peers locally. Our primary multiple was the EV to EBITDA, which yielded a share price of rupees 28.7, which reinforces our buy recommendation. ESG is at the forefront of the business model of BPPL. As the leading pet recycler in Sri Lanka, BPPL's RPY growth is directly tied to the amount of pet collected and recycled within the country. BPPL strives to continuously improve the pet recycling while improving the zero waste concept and solar-based energy. BPPL prioritizes in retaining employees through a wide array of activities while developing human resources. The community engagement that they receive and the 20-plus-year customer relationships demonstrates BPPL's wider social impact on the key business partners. The well-balanced board of BPPL with experts in diverse fields consists of 3 executive directors and 5 non-executive directors, out of which 3 are independent. The public shareholding stood at 14%, comfortably adhering to the CSE requirements of 10%.
BPPL is like a deep-rooted tree. It may sway, but it will not tumble. We undertook a comprehensive analysis which has the potential to sway our recommendations south under the main risk categories of market, operational, financial, and regulatory. Crude oil prices are a determining factor of brush raw material cost, which is unlikely to materialize due to the increased usage of filaments in the brushes. When it comes to the effect of policy tax rates, BPPL has a long-term BOI agreement for eco-spindles at 15%, gradually bringing down the effective tax rate and mitigating the impact. At the same time, the impact of LKR depreciation would be favorable for BPPL due to the high USD revenue base, which may outshadow the increased cost of materials. With the socially responsible consumption, world-class PD sourcing process, and the buffer against the Sri Lankan economy, we reiterate our buy recommendation for BPPL with the 24-month target price of LKR 31.9, generating an upside potential of 18%. For a sustainable growth-seeking investor in the long haul, BPPL is a gem in disguise. We are Team A of University of Sri Jawaharlal, and we are open to your questions. Thank you.
Okay, great. Maybe I'll start with the question. Is the locally sourced PET like mainly driven because of the exchange rate, or is there any other factor that's driving that?
So the locally sourced PET in the sense now 90%. Sorry, sir. Thank you for the question, and I'll take up. I prefer to answer it. So 90% of Sri Lankan RPY, 90% of RPY, the RPY demand is imported as of now. So only 10% is supplied by BPPL as of now. So we expect that the BPPL's capacity expansions will lead to a capacity utilization rate of 90% by 2026. So that is one of the main reasons why we consider that. So Hashini will continue with the answer.
Yeah, so first of all, speaking about yarn, their segmental growth is of 6% CAGR at the moment. And also with regard to the sustainability aspect, at the moment, the textile customers, 8 out of 10 customers, they are seeking, they're environmentally conscious and environmentally aware, and they are specifically seeking to purchase products from environmentally friendly producers. So basically, when considering BPPL, their recycled polyester yarn is produced out of recycled PET flakes. So the recycling part is at the forefront of their business model, and they are a very environmentally friendly producer, as well as being eco-friendly is a priority with regard to their business model entirely. And their
just so I understand, so what you're saying is that it's not really driven by the exchange rate.
Yes, I will answer the question. So the exchange rate plays an important part in that because so the main customers, as we see, the RPY main customers of BPPL are the local textile and garment peers. So those textile and garment peers are big brands which they outsource. So they basically cater to the wider customers in the world, main sportswear as well as stuff like that. So the revenue and everything, the revenue they get is stemming from that LKR depreciation and the basically in USD. So it is an indirect demand for RPY as we see at the moment, which anyways is tied with the end LKR depreciation.
Okay, let me ask another question, which is just you've done an average of two valuation methods, and on the theoretically it feels like it's a safe thing to do, but sometimes as an analyst you may think that the average of two does not mean that it's the right one. And sometimes analysts will choose an average of two because they don't really want to pick one or the other. So can you just explain why you're presenting to us an average of two methodologies rather than picking one? Now, I'm not saying which one's right or wrong, but I would like just a little explanation on that. That's my last question.
So thank you so much for your question. I will answer the question. So we actually conducted a relative valuation to compare BPPL with similar peer groups. But due to the lack of publicly listed brush peers, we classified a group of publicly listed export-oriented manufacturing companies to represent the brush segment. And due to the lack of listed yarn manufacturing companies, in SL, we have used a group of international peers to represent the RPY segment. So we consider the EV/EBITDA as the most appropriate multiple, as you can see, due to the capital-intensive nature of the industry. So considering the two segments, we arrived at a target multiple of 7.5 times. So of course, we used a blanket multiple to cover the whole group. And then we acquired a target price of rupees 28.66, which gives an upside of 24%, which also again reinforces our buy recommendation.
Also to add on to that, and
can you show the slide that shows the two the DCF and the multiple? I think it's either the next one or the prior one. No, not that one. Yeah. Okay. So there's your DCF. And the reason why I'm asking is because, as you say, it's really hard to get comparable peers. You know, particularly, let's say in Sri Lanka, you're not necessarily going to have comparable peers, and then you go outside and you get multiples from companies that are operating in different markets. So whereas with DCF, you can say there's less of that relative nature. So I'm just trying to understand why bring relative valuation into your final target price versus just using it as a reference. So that is really my last question.
Thank you so much for the question. I'll take that up. So what we wanted to highlight here was just as you said, what we see is there's not a lot of lot of listed companies in Sri Lanka which is directly comparable for BPPR. So what we have used is proxies rather than peers. So in that case, we have understood that it is not really significant. Because of that only, we have given a 20% weightage to that, significantly low compared to the DCF, which we are given 80%. But at the same time, what we wanted to emphasize is there are certain valuation problems in these days and times in Sri Lanka because of the high cost of equity, abnormal risk-free rates. Because of that, we can't say DCF is a 100% correct model or 100% accurate. So because of that, we wanted to put in a 20% weightage from relative valuation to give some more context into it in a sense where how much of Sri Lankan export companies.
I have to ask one little bit more. Sorry. You're the first ones to give us a 2-year target. Does that mean you're talking about 18% per year for the next 2 years, or you're talking about 9% per year for the next 2 years?
No, the 18% is an annualized target price. So annualized, it's 18%. So here you can see the annualized is, so in the base case, we get an annualized of 17%. In the bull case, we get an annualized 27%. And in bear case, we get an annualized 9%. So that means the base case gives like 35 to 40% altogether for both years.
Okay, let's let our other judges ask questions.
Thank you so much.
Could you explain me your rationale behind the 17% cost of debt that you used, and why you used it, given that there's a mix of foreign and local debt, or how you came up with the 17% cost of debt?
Yeah, when it comes to the loans and loans in the BPPL, all the loans are USD dominated. So the currently LIBOR rate also getting high increase and there's US recession. So we calculated the cost of debt using the effective interest rate, using the average of the historicals and the forecasted figures.
Does it include, if it's dollar borrowings, does it include a hedging cost also? Why it makes it this high in terms of at 17.5%?
Thank you so much. I'll take that up. So what it includes is we have actually thought about what will happen to the LIBOR. So mostly all the loans BPPL have at the moment are LIBOR based. So we have thought about what will happen to the LIBOR, and we have seen that LIBOR is at a significantly high level compared to the historical. So we have accounted that part as well. And then we have properly adjusted it to it and see how the loan payments and the proper like loan installments and the interest, how it will spread over the forecasted period of 8 years. And as Yasan correctly mentioned, it's a average of the forecasted period as well as the last 5 years of BPPL altogether, which will give us the 17.48% of the cost of debt. That's after tax cost of debt. The cost of debt is 22.56.
If I were to ask you one last question, what is your assumption on the long-term LIBOR rate?
Yeah, so what we see is the LIBOR rates are basically, it's very piled up right now because of the US and the developed world recession. So they try to bring down the domestic like expenditure and everything. So when the inflation reduces and the country stabilizes in the US and UK, and also they have to cater the recession also. So recession, to do that, I think the LIBOR will come down from the level, not in a drastic manner, but it will eventually come down. That's our assumption in the market.
Thank you, team. I believe the time is up for the Q&A session. Over to you, Vijit.
Thank you, Sulakshana, and thank you, University of Sri Jayewardenepura Team 5. I assume our Judge Nadika did not get a chance to ask in the Q&A, but I assume the other panel of judges covered the questioning for her. So now I think it's time for us, and again, thank you, University of Sri Jayewardenepura, for that good presentation. And now we will move on to our final team for the day and in the competition, which is University of Colombo Team 5. So University of Colombo Team 5 is represented by Sachini, Hazara, Navindya, Vidurya, and led by Lakita. So let us give them some time to settle down, and during which time, as usual, I'll hand over the proceedings to Sulakshana to keep time and let the teams know when it's time to stop the presentation and move on to the Q&A. And may I request the team to give a chance to all the judges to ask questions, so that you quickly answer the questions that are being put forward to you. So over to you, Sulakshana, and University of Colombo Team 5. See you on the other side, and all the best.
Thank you, Vijit. I believe all members from University of Colombo Team 5 has joined the meeting.
Yes, wait, give us a minute. Yeah.
Right. Lakit, if you can start sharing your screen.
Yeah, sure. Such a share the screen. Can you see the screen, Sulakshana?
We can see the screen. You may go on full screen mode and start your presentation. All the very best.
Sure.
Shall I start?
Yeah.
Going green doesn't always mean doing green. Good evening, dear investors. We are Team 5 of University of Colombo presenting to you a sell recommendation on BBPL Holdings with a 12-month target price of 20 rupees and 72 cents, a 9.91% price downside. The recommendation is backed by three main arguments: global recessionary impact on BBPL's growing synthetic yarn market, the slowdown in the growth of brushwear by 14%, and depressed margins due to cost hikes. BPPL is a mother company to three fully owned subsidiaries. BPPL earns its revenue through two main segments. The synthetic and filament yarn segment, which is growing segment, contributes to 28% of revenue. And brushwear, which is the mature segment, contributes to 72% of revenue. The revenue contribution from USA and Canada has declined over the years, while the Sri Lankan and Indian market has grown, especially in synthetic yarn market. Both of these segments use PET plastic as their main raw material. Currently, 50% of this is imported, and we project this rate to go to 60 to 65%. Moving on to the first argument. As per the global statistics, the synthetic yarn has grown at 5.1% CAGR. However, we believe BPPL would not be able to capitalize on the opportunity because these three key factors hinder its growth of the segment. The local apparel sector is a core driver of BPPL's yarn segment. With the uncertainty of operating environment, existing apparel firms move out of Sri Lanka and expand operations in other competitive countries. This will curb segmental growth. Ability to source PET bottles, which is the primary raw material, cost-effectively is a crucial factor. With a low collection rate of 40% compared to other regional countries, BPPL will have limited access towards PET locally, resulting in importing majority at higher price. Further, natural fiber, which is a direct alternative, has projected a higher CAGR rate and is preferred by apparel sector still over synthetic yarn due to durability, comfort, and sustainability, resulting in slowing down the growth of synthetic yarn market. Over to you, Hasara.
Thank you, Sashini. So keeping the questionable contribution from the synthetic yarn segment in mind, let's switch our focus towards the brushwear segment. This has dominated the revenue mix over the years, yet has notably declined in its contribution. The segment is dominated by its professional or commercial category, which has a very high exposure to the US economic growth rate. The expected decline in the growth rate will leave the end-use industries vulnerable, creating unsatisfactory demand. Additionally, the change in consumer preferences and higher CAGR rates of electronic substitutes raise concerns regarding the ability of brushwear to sustain its position in a fast-moving world. In terms of the competitors in the Western market, it is safe to say that BPPL is up against some strong players with years of experience and broad specialization. So needless to say that they definitely hold an upper hand over BPPL. So the growth prospects might be red, but what exactly does it mean for our bottom line? The significant negative hedging reserve and the declining interest rate coverage signals that the company is overhedged and that it faces an increased financial risk. This would tarnish the borrowing ability of the company, which would ultimately restrict the local expansion, creating a high import requirement. In addition to that, the expected ban on single-use plastics will encourage beverage companies to shift to alternatives of PET bottles, limiting the access to locally sourced raw material. So high imports and a continuous depreciation of exchange rate would directly lead to a significant increase in cost of sales. Moving on, as a result of the recent government policy changes, we expect an increase in labor costs, finance costs, energy costs, and the tax expense. This will cause the margins to plummet by a significant value and will directly exert pressure on the bottom line. Over to you, Aidurya.
Thank you, Hazara. Every company's success relies on a robust financial strategy. Let's now evaluate how BPPL is in place of its strategy. A high financial leverage is driven by the continuous short-term borrowings. As per the company's recent performance and the current economic situation of the country, it is prudent that the creditworthiness of the company and the country is not in favor with the line of the company. This will hinder the ability to local expansions, leading to higher short-term borrowings with a high premium financing cost. According to our prediction, we anticipate an increase in the interest-bearing loans by 49.1%. However, the company's loss of market share in US and Canada, coupled with the stagnant growth rates in the synthetic yarn segment, with anticipated decline in the textile export earnings in Sri Lanka, will result in a decline in the net cash generated by the company, which is expected to become negative by the end of 2026. Moving on, nextly, BPPL's lost ground in terms of the industry. BPPL doesn't have direct competitors based on the exact composition of the segments, but based on the overall operations, Tongun Group and Torre has been taken for comparison. In terms of their margins, both the players are lagging than their 5-year average, showing that the industry of the BPPL operates is falling. But BPPL's margins are much more lower than the falling industry margin, implies that margin implies that the BPPL has lost its competitive positioning, causing the shareholder returns on equity and invested capital to decline by 8% on an average on the forecasted years. Finally, the inefficient working capital management causing a cash crunch for the company. We would say that the company's working capital management is being inefficient since the net working capital days is reducing over the forecasted period as shown in the graph, which will cause possible effects such as increase in the risk of bad debts, decline in the net cash generated, lower creditworthiness, high storage costs, and increase in short-term borrowings, which will ultimately impact the bottom line of the company. Are all these analyses and justifications adding value to the BPPL stock price? Over to you, Laklit.
Thank you, Adoria. A 12-month target price of 20.72 is derived using discounted cash flow valuation. We basically used two-stage WACC in order to give an accurate picture, as current risk-free rates do not give a better picture since Sri Lanka is at a default stage. As a result, we used 25.13 for the first 2 years of the forecasting period and 17.40 for the remaining 3 years, applying risk-free rates of 20.45 and 11% respectively. For the DCF, terminal growth rate stood at 3% and the target capital structure of 40% of debt and 60% of equity assumed for the valuation. In the relative valuation, we used peers based on operating segments of BPP, where we considered MGT and TJL for the synthetic yarn and Richard Export Peters for the brushware segment of the company. And two global players considered Tongkung Group and Toray, as there are not any listed comparable for BPPL. As per the relative valuation, BPPL is trading at a high multiple compared to the considered proxy companies, trading 10.86 times of PE and 11.23 times of EV/EBITDA, whereas the average trading multiple is stood at 8.73 times and 7.45 times respectively, concluding BPPL is overvalued based on relative valuation as well. In the scenario analysis, if the economic outlook and company specifics are favorable and positive, we derived a price of 25.89 under bull case, and if the economic conditions and company specifics are unfavorable and negative, obtained a price of 18.06 in the bear case. In terms of the sensitivity analysis is calculated using long-term WACC rate of 17.40 for the terminal growth rate changes. Over to you, Navinda.
Thank you, Lakit. Sri Lanka's largest plastic recycler, BPPL, is one of the few pure ESG impact companies in Asia with collective focus on sustainability. Since more than 583 billion PET plastic bottles are produced each year, with 85% of it going to landfills, BPPL's business model provides a sustainable solution to minimize the environmental impact caused by plastic. Using recycled PET, it consumes less water and emits less of greenhouse gas emission rather than virgin PET. The company has been able to successfully touch their ES goals during their normal course of operations, although raising concerns over governance due to the less gender diversity in the top management. Despite progress towards sustainability, profit still takes precedence over the well-being of people and planet in the triple bottom line of business. Overall, we can conclude saying that BPPL has gone an extra mile to build a business model that is truly sustainable of every aspect. Moving on to investment risk, global inflation has led to negative consequences for economies worldwide, resulting in reduced consumer purchasing power and potential decrease in global demand for garments. Due to the positive correlation of the synthetic yarn with the apparel sector, this will have a negative impact on BPPL. Over the last 12 months, there has been a 180% increase in electricity tariffs, and the corporate tax rate for export-oriented companies was increased 30% from 14%. This led to a further decrease in the bottom line of BPPL, and also with the probability of IMFs coming in, there is a risk of further increase of tax rates. In summary, based on the analysis of the company's financials, industry trends, and market conditions, we recommend a sell position for this stock. Though the company has potential for growth in the long term, the global recessionary impact of BPPL's growing synthetic yarn segment, slowdown in the growth of brushwear by 14%, and depressed margin due to cost side provide an adverse impact on BPPL stocks in the short run. With that, we conclude our presentation and we are open for questions.
To start off, can I just check, you said that the competitive position in the brush segment would be weakening in the future, given the kind of the profiles of the competitors and all. Could you explain a bit more on that, how you came to that conclusion? Because the company has been able to kind of keep the demand going in the US market and also.
Yes. So what we assume is, I mean, of course, the demand is growing in the North American market. But what we assume is, since the company is focusing a bit more on the synthetic yarn segment and the brushwear segment has come into somewhat of a mature market, we believe that the strategies of the competitors would negatively affect the company. For example, if you take few of the companies here, now companies like Rubbermaid Commercial Products is a subsidiary of a very large company. So they are specialized in the entire cleaning industry, whereas BPPL is specialized only in brushwear and synthetic yarn. So they definitely have a broader product range to compete against BPPL. And in that terms, we believe that they have an upper hand.
Okay. Okay. That's the question. All the questions I had. Over to the others.
Maybe I'll just ask, if I look at your kind of two-stage WACC, which I think makes sense because things will eventually come down. I feel like you're giving it a reasonable cost of capital. So it's not like you're punishing it and then causing therefore the downside. Your terminal growth rate of 3% is also relatively reasonable. It's not like you're so what I'm just thinking about is, I guess this is all just driven by revenue growth and margin. Is how would you describe it in terms of valuation if we strip away terminal growth and if we strip away your discount rate? Just talk briefly about the cash flows and kind of what you're expecting.
Yes, and right, I'm totally agree with your opinion. So basically, the revenue, in terms of the revenue, there is a steady growth in terms of both synthetic yarn and brushwear segment. But here we are mainly concerned about the free cash flows as well as the net income available to stockholders, because the associated cost, like connected with both segments, are leading for the reduction of the both gross profit margins as well as net profit margins. So that is the main base for our thesis as well as the reason for this valuation.
Okay, thank you.
One question from me. You had mentioned that the segment revenue of the brushwear segment is decreasing by 14%. Is it 14% going into the future, or is it based on the historical numbers presented by the company?
Yeah, that's a forecasted value of 14%. So we expect, so though in the historicals, we could find that there was a reasonable increase in the brushwear industry as well as in the synthetic yarn. But given the global recessionary impacts and the cost hikes, mainly it's the cost hikes, we expect that the revenue impact for the brushwear is going to decline in the forecasted periods.
One final question from me in terms of recessionary impact. If it's going to be short-lived for 1 to 2 years, do you think that a 14% kind of CAGR can last for a longer period of time, or do you think because it's a mature company that they can revert back to a stable kind of growth rate?
Okay, so since brushwear segment is a mature company, so we don't think that they can get back to the normal position even when the recession is came back to the normal state. So given the recession or when the global recessionary impact is coming back to the normal, and since the brushwear market is almost losing its competitive positioning, so and also because of their cash crunch they already have with that, so we assume that they cannot come back to the general position which is pre-COVID situations. Adding on to that, we have mentioned that because of innovations, other brushwear, vacuum cleaners, robotic vacuum cleaners, and others have a higher percentage of CAGR. So we believe that they would not be able to come back to the stable.
Thank you.
And if there's still time, just the locally sourced PET, other teams as well as maybe the market thinks that's not going to be such a problem. Why do you think it's going to be a problem and the market thinks it's not?
Yeah, I think source of PET is the main problem that the BPPL currently facing as a company. Give a second, could you meet? Thanks. So basically, currently, company is sourced 50% of PET locally, and the remaining 50% is imported by paying a premium prices. So we expect that to go up to 65% of loss, because in order to source PET locally, there should be a lot of incentives need to be given and a lot of awareness, as well as the infrastructure should be properly structured. Since the operating environment is uncertain, we do not believe that there is like a significant or exponential growth in terms of BPPL, in terms of PT collection locally.
But they're already collecting locally now, right?
Yeah.
So
Adding on to that, currently the PET bottle collection rate is 40%. Compared to the region, it's the least amount. So we believe they have about 480 collection points right now. So with the current level, there's less capacity. So that's why we believe they need to import more.
Adding on to that, the company is like more focused on a lot of loans to make their capacity expansions. So they have thought that only if they receive a lot of loans, they can make the PET collection center. So rather than rather than depending on the locally source, like they will have to depend more on the imported source, as they depend on the local capacity expansions. And what we say is the capacity expansions for the BPPL is gonna go down. So as their loans.
One other question until we get cut off is, in this chart that you've got on the left-hand side, the explosion in the debt is already a known thing in the market. There is still some increase coming, but those incremental increases are small. Do you really think that this is that significant? The market already knows this information.
Yeah, so I would say that the company's been secured a loan of 15 million USD worth of loan from DFC, which is a very significant amount for them to make the capacity expansions. And although they have told that they would be able to receive disbursed loan by the last December, but then the latest financial reports doesn't really reflect that they have received the 15 million USD. So which implies that there could be a risk of receiving the loans a bit delayed. So like until there's a delay of receiving the loans, so the company can't halt its operations, or it can't stop its operations. So they will have
So
to
are you
go
including those loans in this chart, or not including that?
Not included fully. Like we expect that they would go for different short-term borrowings until they get their 15 million USD, so which is going to cause an incremental financial cost.
Okay.
Judges, we still have a couple of minutes remaining if you want to shoot up one more question. Or if that's not the case, we can probably wrap up.
I can pose a question. So your margin of error is only 9%. So you're saying it's a sell. The margin is only 9% in terms of a sell. What is the biggest risk that you foresee which could turn it the other way around in terms of making it into a hold or a buy from your perspective?
Yeah, shall I take that question, sir? Yeah. So we believe the operating environment of the BPPL need to be changed significantly. For an example, let's take a company TJ Lanka. They recently made an investment in India in strengthening synthetic yarn segment. But BPPL, the operating environment is Sri Lanka. So the macro which is existing in the operating environment need to be changed significantly for this company to be a buy or a hold strategy.
To add on to that, if they change the context, they can move to a hold or a buy position.
Got it. Thanks.
Thank you, team. I believe the time allocated for the Q&A session is up. Over to you, Vijit.
Thank you, Sulakshana, and thank you, University of Colombo Team 5. I believe University of Colombo Team 5 is the only bear in the market, in a bull market, walking upstream, I guess, and answering some hard questions from our panel of judges. So again, thank you, University of Colombo, Team 5. Thank you for that nice presentation and answering the questions that our judges posed. Now that all the 4 teams have presented, it's time for our eminent panel of judges to decide on the scoring for the presentation round. Judges, you may join the designated link for the separate breakout session to calibrate and finally come back to us with the scores for today's competition on the presentation. A bit of housekeeping in terms of how the winners will come out today. The overall winners for this evening will be awarded based on the performance of the teams in both the presentation, which is today, and the report round, which concluded a few weeks back ago, from which these 4 teams were identified as the finalists. So now the judges, if you may, please join in the link which has been shared for the breakaway session so that you can deliberate and come back to us and provide us the final score for today. So let me give a brief summary of the events that unfolded today. So we had 4 finalists who presented their case. 3 companies presented and shout out loud saying it's a buy, and then 1 company stood strong and said it's a sell. So the 4 finalists for today's competition was University of Colombo team 1, University of Kelaniya team B, University of Sri Jawadhanapura team 5, and then again we have from University of Colombo team 5. So those were the 4 finalists, and now the presentations are done and dusted. We are now waiting for the judges to calibrate. So during that time, we have few videos about CFA and about the CFA Research Challenge, CFA Institute Research Challenge, and a few videos from some of our sponsors, and during which time we will give you more information how this whole program took place. It's not only these teams, it's not only these judges, there were other what we called as volunteers from the CFA Institute who dedicated their time and effort in making this event a reality. So we will be providing due credit for them as well during this period. But before that, there are a few videos that we will move on to, and during which we will come back again.
Hello, BPPL Holdings PLC is one of Asia's largest brush manufacturers and recognized as a pioneer and trailblazer in developing and creating eco-friendly products using recycled plastic. Through our subsidiaries Bera Brush Private Limited and Eco Spindles Private Limited, we contribute towards a greener Sri Lanka while generating value for our customers worldwide. We are committed to supporting professional development amongst our students and are extremely pleased to participate as this year's subject company of the local annual research challenge, the global competition organized by the CFA Institute and CFA Society Sri Lanka. The competition provides an ideal platform for students from diverse fields to gain hands-on mentoring and intensive training in financial analysis and professional ethics, and real-world experience via a global arena as they assume the role of research analysts. Not only does this annual educational initiative promote the best ethical practices in equity research, it also showcases their talents in analytics, valuations, report writing, and presentation skills. The challenge provides students with unique opportunities to meet and learn from leading industry experts and compete with peers from the world's top finance programs and to apply what they have learned in the classroom to real-world practices. Students benefit immensely as the challenge provides experience in a real-world setting to complement the students' academic curriculum. With advancing technologies changing the shape of careers in finance, while technical skills are most important at career entry, soft skills and leadership skills have become more important in the new world of work. This competition helps students to develop and gain a wider competence of interpersonal skills and deepen their expertise to drive forward their careers. BPPL Holdings, as a groundbreaking company within the industry, is pleased to be able to actively contribute towards the development of these students, helping to advance the next generation of investment practitioners. We believe this year's competition will be truly challenging, exciting, and rewarding for all participating teams, eventually leading to contribute towards adding value to the country and our business community. We wish you well. Thank you.
Ladies and gentlemen, that was Dr. Anush Amarasinghe, founder, CEO, and also the managing director of this year's target company, which is BPPL Holdings PLC. As Dr. Anush mentioned, the company, together with Dr. Anush, provided valuable insights for our contestants in order to generate these reports and the presentation material that were presented to you all and the judges today. So once again, a big round of applause to Dr. Anush and the team at BPPL Holdings PLC for giving us the time and to conduct this research challenge based on their company. So we will move on to some more videos now.
Hi, I'm Erica Estrada, and I'm a product manager with Kaplan Financial Education. I want to congratulate you on participating in this year's research challenge. As a participant, you'll stand out not only for your investment analysis, but also for showing grit and determination during this COVID-19 adversity. We're thrilled to have representatives of universities and Kaplan clients participating in this challenge. We're delighted to support those that share in our educational mission. We'd also like to give a special welcome to many of Kaplan's former and current clients who are participating as industry coaches and faculty advisors. Many of you may be wondering, why is Kaplan launching this initiative and with free resources? Well, you've chosen to invest in yourself, and we'd like to co-invest alongside you by making some of our resources available to you for this challenge. Prep resources from across our financial education offerings will help you stand out both in terms of this research challenge and your academic career. We wish you the best of luck with the challenge, and we hope that you'll find Kaplan's resources helpful for you. Welcome to Kaplan's free resources website for this research challenge. This is being launched for the first time amidst the pandemic to help take your research challenge to the next level. Our partners at the CFA Society will email the link to you. Please bookmark it as you prepare to tackle the valuation of your company as part of the research challenge. Your success in the research challenge depends on how well you understand a vast complexity of factors about one stop. To aid you in this task and arm you with the skills, Kaplan has curated 9 hours of programming across 21 videos from some of its best instructors who teach real-world exam prep courses. You'll also find benefit from the soft skills corporate management training videos that will equip you to succeed in the research challenge as well, and serve you well afterwards as you leave your university to move up the corporate ladder. You can also start lowering your costs of getting your first post-university finance credential by claiming your CFA Research Challenge discount of 15% off Kaplan's prep services by clicking on the portal link for the Chartered Financial Analyst, CFP designation, and FINRA securities licensing. You can access featured content from all three of these designations, which will be key to your Research Challenge's major themes. Do take advantage of the insights in our Cash Flow Fundamentals video, which comes straight from Schweizer Prep for the CFA Level 1, which you, by the way, can take while still in your last year of university. How does your company fit into the world around it? You can put the ESG overlay on your valuation using our hot off the press video, which also contains insights on the COVID-19 impact on socially responsible investing from Kaplan's College for Financial Planning. Your team will ponder if the way the stock trades will impact your buy, sell, hold recommendations. Don't miss out on the insights into the world of stock brokering and securities trading by watching the video from Kaplan's Prep for FINRA Security Industry Essential, or SIE, which you can also start studying for to distinguish your resume from others applying for jobs in this industry. These are 3 videos that come from the collection of 20 self-paced recordings, which Kaplan curated for you by grouping them in each of the 5 core stages of the CFA Research Challenge. Team leadership and instruction tools for the coaches can be found on the tab for faculty advisors and industry mentors. You'll find a treasure trove of videos from all of our prep, including CFA, CFP, and licensing, which will help you make sense of the company's financials. Even more impressive is the library of tools which you'll need to value your stock. Don't forget to check out our extra resources as you consider your company's environment, relationships with stakeholders, and corporate governance. Get ahead of the competitors as you prepare to present your pitch by learning the tricks of executives, including influence and persuasion, to help get your ideas accepted. For the first time ever, you'll have access to 9 hours of content and insights without having to make a purchase. Don't miss out on the chance to take your research challenge to the next level using these free resources from Kaplan. We here at Kaplan are invested in taking you to the next level of the research challenge, the next level of your academic journey, the next level of your job placement, and the next levels of your career thereafter. You already took a big step towards that by participating in the research challenge. And Kaplan resources are here for you wherever you decide to go next. Hi, I'm
Thank you all for being here with us today.
The first team that is to present today.
We're the Team University of Colombo, here to present you our investment thesis on Ceylon Cold Stores PLC.
That projection one.
Good evening, everyone. We are here to present our analysis for Ceylon Cold Stores PLC.
Were you able to find that out?
Their main strategy is using more of the
Thank you.
Good evening, ladies and gentlemen. Whether it is to quench your thirst,
Sri Lanka's per capita income on the rise.
What about the cost per square foot and this foreign exchange risk mitigation?
Good evening, everyone. We are Team G. First reason why we issue a sale recommendation.
Have they taken any? How fast should they expand?
operational cost acceleration is
Sugar taxation is impossible.
The runner-up, University of Colombo.
Winning the title today, University of Sri Javardhanapura.
When I think about CFA Institute, I think about reputation and opportunity. My name is Richard Brandweiner. I live in Sydney, Australia. Becoming a CFA charter holder certainly opened doors in my career. I can honestly say it was probably the best decision that I made in my career. Probably one of the best attributes of CFA Institute isn't actually the CFA Charter program that you do at the beginning. It's actually being part of a global community of investment professionals that all represent the same sorts of ideals. I think CFA charter holders are very good at asking themselves, why are we doing the things that we do? There's a higher purpose to what we need to do in financial services to make a bigger difference in the world into which our community is going to retire. When people see the CFA designation on your business card, it means certain things. It means you've achieved a certain professional standard and you also represent a certain way of investing, a certain way of doing business. If we can invest in ways that focuses on genuine long-term value creation, if we can avoid speculation, if we can hold true to the ideals that CFA Institute represents, the ideals that are espoused by CFA charter holders, then we will take a very significant step, starting to regain the trust of our stakeholders, using the work that we do to make a real difference to the world at large. I can't thank CFA Institute enough. What it's done for me and my career and my family, it's been a big part of my journey, and it's been enormously fun and enormously beneficial. And ultimately, it's given me the opportunity to give a lot back.
For me, the CFA Charter represents rigorous training and highly ethical behaviour. My name is Maria Abinizio and I'm based in Hong Kong. What's great about CFA Institute is it's a genuinely global organisation. Being part of CFA Institute allows you to quickly connect to other charter holders. It is actually, very diverse, and particularly within Asia, and that's very valuable when you're looking to make a decision or when you're trying to think more creatively about a problem. I think, the more perspectives that you have, the more likely it is that something's going to spark. When I'm interviewing candidates, it does make a difference if someone does have the CFA designation. The program is somewhat unique because it spends a lot of time, or there's quite a large component of the curriculum focused on ethical conduct and very, very core commitment that you literally make every year when you renew your membership. What CFA does is really put a focus on really delivering for investors. The more individuals in the organisation that have the CFA Charter and have that broad-based training, actually the higher the degree of competence you have to be able to genuinely engage with clients in a way that's about solving their needs. And, always coming back to first principles, always looking at the investors and putting that first. And that, I think, that's something that's very, very important for the industry.
This is our first virtual research challenge we had.
The Sri Lankan economy was downgraded by the Fitch ratings, and to perform in a country like, invest in a country like Sri Lanka, the investors need some kind of a reward for investing.
WTC is the first real estate development project in Sri Lanka which provides 750,000 plus square feet commercial and retail space.
We expect these factors to exert a downward pressure on the demand for Grade A office space market, leaving OCR vulnerable.
It gives a green signal that Sri Lanka's vertical living has more room to go in the fridge.
Marina Square, which is located at a prime location with matching amenities as Havelock City, sells their apartments at a 35% discount. Losing the first mover advantage of a city within a city concept and the competitive disadvantage of being a pure player has hurt OCR competitively.
We use different costs of equity for each segment based on CAPM, and our risk-free rate of 6.6% is based on the 5-year Sri Lanka Treasury bond rate, while our terminal growth rate of 3% is based on Sri Lanka's long-term expected GDP growth rate.
So we think that Miraca Tower, with this port technology and being a LEED certified commercial building, we expect that we will grasp that opportunity.
Real estate is like a chess game. All it takes is one blunder to lose the game. But unfortunately for OCR, we have found 4. A lackluster industry, geographical mispositioning, intense competition, and depressed financials. So what's your next move?
Good evening, ladies and gentlemen. Thank you for your patience. I believe that the prominent panel of judges has calibrated and they have now finalized the winners. So just to give you again a brief understanding how the winners would be decided. As I told you, the overall winner this evening will be awarded based on the performance of the teams in both the presentation and the report round. So both presentation and reports will be given equal weights, and based on each of these 4 teams' performance at the presentation and report round, we are today, this evening, going to decide who's the runners-up and then the winners. Before we move on and announce the winners for today, I think for one more time, we have to give due credit to our sponsors who have made this event a reality today. And by doing so, we hope that they will continue to extend their kind cooperation during next year as well. And hopefully next year we will be not having a virtual, but in-person competition, which would be, I think, what everyone is waiting for. So let us again give credit to our sponsors. As you know, Colombo Stock Exchange is our platinum sponsor for the event, and our silver sponsors are Equity Partners, Capital Alliance Group, First Capital, NDB Capital Holdings, Senfin Asset Management, USA based Sri Lanka. Knowledge partners are Equity Knowledge Partners, and event sponsors are Kaplan Swesher. Ladies and gentlemen, and all the contestants and participants, now I think before we move on to the highlight of the evening, it is time to give a vote of thanks. So as I've told you earlier, we had we selected the teams, so the teams were selected, and then they were assigned mentors who were volunteers, who were CFA chartered holder volunteers who helped and mentor these teams. And then we had a facilitator from their own academic university or their colleges. And then we had for our report evaluation session, we had graders who were assisting us. And today we have judges who are evaluating the final presentations. So all of that is possible for their contribution, and to again give them a good and a special vote of thanks. May I invite Chair Organizing Committee, CFA Institute Research Challenge Sri Lanka 2023, Inisha Pereira. Inisha, over to you for the vote of thanks.
Thanks very much, Vijit. Thank you. Good evening, ladies and gentlemen. That was a roller coaster of a competition, and I'm sure we are all eagerly awaiting to see who the winners this evening are. Before we move on to the most exciting part of today's event, on behalf of the CFA Society Sri Lanka, I would like to take a couple of minutes to thank everyone who contributed to this event over the last couple of months. To start off, I would like to thank all the teams that took part in the competition. We had 19 applications this year. We are extremely grateful for the dedication and the effort put in by the teams that submitted the report. Thank you to our finalists today for seeing it through till today. Our gratitude is also extended to all the participant universities and university mentors as well for giving their students the opportunity to participate in such events and for guiding them throughout. I would also like to acknowledge the contributions by the industry mentors who are all CFA charter holders for mentoring the teams. In addition to the industry mentors, we also had another panel of CFA charter holders coming on board as graders. led by Buddhika Fernando, to grade the written reports. Thank you to all of you. I would also like to thank the University Outreach team of the Society for helping us on numerous occasions. We are also extremely thankful for BPPL Holdings PLC, the subject company this year. It has been an absolute pleasure working with Dr. Anush Amarasinghe, CEO of BPPL, and his team. Thank you for supporting us with all our requests. I would also like to thank the sponsors for this year, without whom this event would not have been possible. Platinum sponsor, the Colombo Stock Exchange. Silver sponsors, Equity Partners, Capital Alliance Group, First Capital, NDB Capital Holdings, Senfin Asset Management, and Uzabase. Knowledge partner, Equity Knowledge Partners, Print Media Partner, Daily FT, event sponsor, Kaplan Schwezer. Thank you for continuing to support us. My gratitude is also extended to our judging panel this evening, to Andrew, Nadika, and Udishan. Thank you so much for accepting our invitation to be a part of this event. I would like to thank the CFA Institute and the CFA Society Sri Lanka for the guidance throughout the competition. Last but not least, thanks very much to my colleagues in the Research Challenge Committee who worked very hard in the last few months and weeks to make this event a success. Thanks a lot, Aruna, Yonita, Samalka, Nilakshi, Vijit, Sulakshana, Sandunika, as well as Srinath from Impact Labs. Have a pleasant evening. Over to you, Vijit, to announce the winners.
Thank you, Anisha. I think, thank you again for everyone for joining us live to witness this event today, which is CFA Institute Research Challenge Sri Lanka 2023. So as I've told you, CFA Institute Research Challenge Sri Lanka Competition 2023, we are now going to announce, I believe we will be announcing the runners-up for today. Again, just a clarification. May I kindly ask all the team members to turn on their videos, as Andrew kindly reminded me to do so. Thank you, Andrew, there.
You're welcome. Can't wait to see it. I think there could be a thing where it's not allowing us to turn on the video.
Yeah, correct. I think we are having a slight issue because I think we are going to have a bit of a drum roll to create that vibe. Let's try to get, okay, yes, here they are. So we can see University of Sri Javadanapura and then, yeah, University of Colombo. Please turn on, yeah, again, University of Colombo and University of Kelaniya. If you all can also turn on your videos. So, ladies and gentlemen, we are going to announce the runners-up, and then we are going to move on to announce the winners. Yes, we are here. We are at that penultimate moment. So let the drum roll begin. We will be announcing the runners-up first.
Five, 4, 3, 2, 1.
So it is University of Kelaniya, Team B is the runners-up for today. So, ladies and gentlemen, let's give them a big round of applause for all their effort from the report session and being selected to the 4 finalists and today becoming the runners-up for this year's event. And let's move on to the flashlight of today's event. Which is the winner who would be raising our flag high in the sub-regional competition. So let the drum roll begin again to announce the winners for this evening.
5, 4, 3, 2, 1.
So ladies and gentlemen and contestants, the winner of the CFA Institute Research Challenge Competition 2023 Sri Lanka is University of, shall I do a Steve Harvey, by the way? No, don't worry. I'll tell the right name. It's University of Sri Jawadhanapura, Team 5, who are the winners, Team A, who are the winners of this year's competition. And yeah, we can see everyone is up in joy. So all the best, team, all the best for your good efforts. So as I've told you, they have progressed from the report stage to the 4 finalist stage. And then now they have the winners who would be representing Sri Lanka in the sub-regional competition. So guys, what are your thoughts? Please let us know. How do you feel? How has the journey been thus far for you all? Please be frank.
Yeah, thank you so much. I hope I'm audible. So we are over the moon, as you see. Yeah. But yeah, thank you so much. I just want to thank you so much for the CFA Institute Sri Lanka. It has been a life-changing event for all of us. I think coming into the competition, we actually did not know much about our passions, but I think everyone here has fell in love with the competition, has come out at the other end as someone else. I think I can't say anything more than that. I got the most amazing team. So these people did it, and all the people on the industry mentor. We have to thank industry mentor Mr. Tarinda Javadana, as well as our faculty mentor, Miss Mahana Meva. Because of this team, so again, thank you very much. It has been a life-changing event. It has been some amazing 6 months. Almost half an a year. We can't even imagine that, but
we should thank the people who are around us throughout also, because I mean we did it in amidst our exams also. So
yeah, thank you so much. Thank you for the opportunity, and couldn't be happier. Thank you so much.
Thank you, University of Sri Jawadhanapura Team A. Thank you for those comments despite the joyous surroundings. So I guess this would be another stepping stone for another year, another research challenge. I think you could relay these experiences to your younger batches so that they also get motivated and join this event next year around and get the chance to represent Sri Lanka. It's a very rare occasion to represent Sri Lanka. So team, all the best for you, and all the best for the remaining teams as well. I assume all of you had a good journey and learned a lot from the industry mentors, and I think the graders gave you good comments on their reports, and also the panel of judges asked you hard questions which any industry analyst has to be geared to answer. So I think it's a intellectually stimulating journey for all of us. And signing off from here in Sri Lanka, Colombo, Vijit and the team that organized this year's research challenge too. Thank you, everyone. Thanks a lot, judges. Thanks a lot for the organizing committee, and thanks a lot for the participants for joining this evening, and good day to you all. Thank you.